That's it I got from the news perspective, saving the Uber story for Mark. We're going to move right into Queen's Court. And the Queen, I'm just going to let you run with this. We do this each and every Tuesday. We hold court session. Queen Emily from the Dynasty Investors Trading Lab has the coaches present them a pick, and she gets to decide if they're good enough or if she chops off their head. Where do you want to go first here, Queen Em?
Well, I have to start with Matthew over there because he did such a wonderful job yesterday on that swing trading webinar. And that's kind of like where my mind is right now. I'm doing a little bit of cash flow, but we have some opportunity to do some short-term swing trading if they allow for that. We'll have to figure out where the level of supports are. Right now we're in no man's land. But if we do have that, that retracement back up to that 50 and then have another, kind of kiss of death to the downside to the 200, it's going to be some good swing trading opportunities to the down. So I am looking forward to that. I haven't done any bearish trades this year at all, so I'm looking forward to that. And I think you did refer to me as queen a couple of times yesterday. So you are ahead in your brownie points.
Respect, Dan.
So you get to go first. And then then I'll
Emily,
next and Mark.
You are the blood of tackle trading. You are the heartbeat of everything we do. And I have so much respect for you and everything you bring to the table. So with that, and with massive respect.
What is the Apple mood for nauseated?
That would be burnt orange. Burnt orange. Mark's burnt orange. By the way, I'm going to get a tackle trading mood ring for investor sentiment, right? I guess we'll just steal every idea Apple brings out with. They are wonderful marketers. But Queen, I digest. We're going to talk about the housing sector here today. I don't love this market. Shockingly, anybody that's watched the halftime report over the last week or so, I don't love this market from a short-term swing trading perspective. The best swing trading environments are trending environments. And when you recently fell a trend and you start a new trend and it was bullish, now it's bearish, it takes a little bit of time for that to kind of shake out, right? And even for those bearish trades, right? The initial breakdown, not a lot of traders nail that initial breakdown because they're actually looking at buying things. They're actually looking at support to confirm and for them to start buying again. And so the initial breakdown really drills everybody at first. And then as the trend starts to develop, traders adapt. And so that just simply takes a little bit of time from a swing trader's perspective. And so while we kind of allow that swing trading environment to reestablish itself, I do like cash flow systems right now. And I do think there's some very attractive value opportunity in certain industries that have bottoming formations starting to happen. And we talked about Lennar earlier today on their earnings report and a little bit of a mixed earnings report. But what did not have a mixed earnings report was old DH Horton. And a couple things just in recently. Obviously, the housing sector was gangbusters for the first 3-4 months of this year. Is that as the Russell 2000 was boom, 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 right? Here's old DH Horton, Pulte, Lennar, all KB Homes, all doing the same thing. Been out of favor for a few months, actually, from an overall broad market perspective. But in that time frame, what has occurred is the 200-day moving average has crept up over time. And quite frankly, DH Horton is a wonderful company. Lennar is a wonderful company. Pulte, a little struggling right now, but those housing companies, those big dog housing companies are really, really good companies. And so when I'm looking at this, probably got out in front of itself long-term in the very similar to what the Russell 2000 did from November through March earlier this year. Housing went gangbusters here. Look how the separation it got from that 200-day moving average, guys. That's just not typical when you're talking about a conservative company like Lennar or DH Horton or so on and so forth. When you look at the weekly chart, guys, that's the typical trend we see in this environment, not that vertical 30% drive up in housing that we saw in January, February, March. And so it surprised me to see the housing sector over the last 6 months, create some degree of neutrality. And what has occurred in that time frame is these slow moving averages. That long-term 200-day moving average has simply caught up to it over time. And thus I look at this as a potential opportunity. And so I do like DH Horton as a pickup here, 200-day moving average. And what I like about it is I am looking at it a little bit longer term position, a little bit of a position style with the cash flow type edge to it by writing covered calls. But what I like about this is the get out. You got a quick get out if things go awry. Okay. And I wouldn't say that about long-term investments, because I would just say write covered calls, write covered calls, write covered calls, write covered calls. But that's not what I'm looking at on DH Horton. I'm looking at a more position style. And so I like the get out here, cheap risk. You see this at 85 level right here. Old resistance, a lot of cluster of volatility right there around 85. Look at the price movement to the downside here. Violates everything, hits that 50, violates the 9 and the 20, but what got gobbled up? Boom, 85. Coincides with old resistance, new support. You're right in that zone. And so you got the 200-day moving average that is going to act as a nice little backstop here. You got the horizontal 85, and if it breaks 85, the simple reality is it is 75 to 80 most likely, and it could get even uglier all the way down to 65. That's a lot of room to go down, and so I don't like holding in the face of that hypothetical volatility. I like a covered call here on DH Horton, picking it up around the 200-day moving average. When you look at this from a fundamental perspective, guys, this week, and this is what you always see in the news, guys, weeks of market volatility, you will see this. You've seen it over the last 10 years. Everybody and their dog starts talking valuation concern. It is the only time the market starts talking valuation concern is in moments of market volatility. I've had valuation concern officially since 2015. Ladies and gentlemen, that has not changed for me since 2015. Almost 7 years ago now have I had valuation concerns. We've had valuation concerns for a very long time, but the only time they actually creep their little head is when market volatility behaves, and then all of a sudden everybody and their dog is like, have you seen the Shiller PE ratio for the first time in the last 3 years? Right? Like literally, that's when they finally Google the Shiller PE ratio. Like, what does a 42 mean? So this is what occurs nonstop. But here's a company in DH Horton that we don't have those concerns. You're looking at a PE ratio of 8. The forward PE ratio is 6. Price to book at 2.3. I mean, this is value. That's what value looks like, is when you got a PE ratio underneath its sector, underneath its industry, with revenue projections that are above. That's what you look for. You look for good value with good proper valuation. You got the technical evidence supporting that as well. And with DH Horton, the reason I like it a little bit more than Lennar, and I like Lennar as well, Lennar, I don't have the same get out here. I like the 200-day moving average at 94, but I also like 95 support level. But under that, I'm like, oh man, I'm going to get stuck because I'm going to sit there and stare at 90, like 90. I don't want to stare at it. I like the get out here. I like the fact that if DH Horton crosses 85, I don't have to think about it anymore. I like that. And so I like DH Horton here, and I like it more from a conservative cash flow perspective. You know, you could go out there and sell a 41 Delta contract, but I don't like that. I like getting into these moving averages here. And so you see, look at the 50, acted as resistance. Look at the 50, acted as support. I'm not looking to get called out here. I don't want to make a decision on the management here. I like selling that call option that coincides with that 50-day moving average here. We're going to come out. We're only looking 24 days out here. We're looking at a short-term cash flow scenario. I come out to the 93 strike price or the 92.5 strike price. I'm going to go to the 26 Delta, 24 days out. I'm going to bring in $105 of cash flow. It's only about 1.1% ROI, non-margin, by the way. That's what you get when you adjust your Delta out a little bit more. But the reason I'm doing that is, once again, I'm not going to sell too tight against this potential reversal. I'm going to sell against the technicals. And right now, now, those technicals in this neutrality DH Horton has went through, those technicals at the 50 stand out to me. I like it, pick it up. I like it at the 200-day moving average. I like a stop loss underneath the 85, selling the 93 call option, bringing in a little cash flow to offset the risk.
All right. Thank you so much for that analysis. Really like it. Tim, you're up next.
All right, Queen, I got a simple trade for you here if we can. Let's move into healthcare real quick, and we're going to be looking at Anthem, ANTM. A couple things. I was going through my morning routine the way that I always do. One of my processes is to go through my Tackle 25 and my dividend fireworks and my dirty, sexy money stocks on the Tackle 25 list. And I was looking at all the charts, and Anthem popped out to me. It's a poor boys cover call candidate from fundamental analysis, but that's not why I'm interested in this one right here. It's just to watch the stock for me in healthcare. Now, healthcare plans, it's an interesting sector right now. Matt talked a little bit about where we are with XLV here recently. I do like the weekly chart on XLV, a little deeper analysis. It needs to see some improvement on the daily, obviously, before you talk in short-term analysis, but that trend is intact. It's beautiful. You have a doji on the weekly. We're only on Tuesday, Matt. Weekly candles don't end on Tuesday. I know that.
But if it did, I would love it.
I do kind of like it. So
I like the zone.
Back on Anthem, I'm interested in the space. I'm interested in the zone. I'm looking for some directional trade to play. And what I like about this one on ANTM is there's a couple things playing out here. Number one, the trigger is very clear. You know, Matt just talked about having a clear exit and a clear stop out kind of place. I always love that. But I also love clear triggers when you're looking at shorter term trades. And if you look at ANTM on an hourly chart, something like that, you're going to see a very clear daily, hourly kind of combined level at $384. And
I'm coming back.
I see. Is he trying to throw me under the bus here? All right.
I hit a button. That's all.
He's getting my head chopped off here.
Hey, Emily, I'm going to go get my sword. You do your deal.
So if you look at this here, Emily, obviously we've been casually drifting down here into some kind of sideways consolidation now for several months. It banged off the 200 period moving average after that, consolidation since May. And I like the fire off the 200 intraday analysis. Matt, you were talking about this earlier. The consolidation has to start improving from intraday analysis to daily analysis. Different time frames start to align. I do like these intraday pivots that have been picking up over the past 5 or 6 sessions. Higher low, higher low, higher high, higher high.
382 makes sense here.
Starting to point towards a trigger right above this little zone right here, Emily. And a couple things I think in terms of a trading plan for this. It's a short-term breakout trade. So T1 is going to be right up there in that 387 to 400 mark. 400 is kind of the round number. Most people would probably just call T1 400. What do you got right?
Second target.
Is that second? 2T2. So however you're targeting this, you know where you have management decisions. If you go to the option chain here real quick, Emily, or Matt, I should say, 30% implied volatility, 28% implied volatility on the options. You can go out. I actually went out and looked at the January options. They're really liquid. This is a good option chain for a stock this size, 20 cents on the spread. So it's optionable in all the ways that I know you, because I mentored you, that you like to trade options. You can get creative with Anthem here. Now, that being said, how you want to execute that could be a couple things. We got earnings coming up in about 6 weeks. Implied volatility starting to build off the extreme lows. We're into that cycle a little bit here, Matt. Are you seeing IV moving higher over time into that earnings as I do?
I am. You're also a little elevated right now from an IV, but again, that's to be understood given the recent volatility in the marketplace. You definitely got to look at IV and look at that 40.40 level. I do think volatility gets back up into that level. That will help the option trade, no doubt.
And that's where my head's at as well. So if you go into the option chain, a long call is in play, but a bull call's in play as well. Or you could even do one of those old, very, very fancy type of plans where you buy the 380 strike in December. As soon as it hits your zone for your target, you then convert it into a call spread, something like that. A lot of choices for traders who know how to execute in options because those spreads are pretty good. And if you go to January, actually, I like the January chain a little bit more, Matt. I was looking at these spreads this morning, and it felt like that 380 strike was a good strike to target there. 23.20 by 23.90. I can find a spread in there for a stock this size. So Emily, I like Anthem. I like the reversal off the 200. I like the trigger, and I think there's an opportunity here.
We'll call 380 by 420 T.
It makes sense to me too. Yep.
So net 25 delta on that one.
Well, and I would leave that up to the trader. The way I would personally do it, Emily, is I would spread it. I don't like just playing straight call options in the bull call spread. I still get Vega working for me, and I can be more patient with it.
If this was a week ago, right, and volatility matters. If this was a week ago, and you are looking at, or 2 weeks ago, and we're looking at the same technical condition, but volatility is towards some very, very lows, man, go buy now the money $400 call option. Let's YOLO.
Yeah.
Right.
Yeah.
But that's not the case. Volatility's already risen up quite dramatically over the last, week and a half, 2 weeks. And so I do like mitigating that a little bit. And we all know that the last 2 weeks before earnings, volatility starts to subside because everybody has already bought their put options and nobody wants to buy high volatility insurance.
Yeah, late in the earnings cycle, it plateaus for certain.
I do think you can get to that 3540 mark before earnings, but I think you only got a couple of weeks of rising volatility here. Yeah. So with that said, I like a spread here.
Yeah. Yeah.
Listen, 380 to 400 makes sense.
It makes a lot of sense to me as well. And you're getting into a space, Emily, that I don't think a lot of people have a lot of exposure in right now. And I do like that weekly chart on healthcare. So Anthem.
And Coach Frank will say, I hate healthcare plans right now, but I kind of like Ant-Man.
Yep. Ant-Man is setting itself up a little bit. All right.
Okay. Well, thank you very much.
And it's not Anthem. It's Ant-Man.
Ant-Man. I know. That's what Frank calls it.
That's what Frank calls it. I think it's funny. Go ahead.
Okay. You're up.
All right. Give me Uber. Short dialogue on Uber here. I like it for 3 reasons. One, I love long-term sentiment shifts when it comes to profitability. The most classic example ever will be Tesla. Tesla for years and years and years, didn't make money. And the big bag heading over Tesla's head was, is this company going to make it? Are they ever going to be profitable? I mean, we remember those stories about Tesla. They start to turn profitable, and well, we've known the stock results since. Uber, CEO came out today, not only raised their third quarter top and bottom line, but also their fourth quarter pointed towards 100 million in EBITDA profitability. One of the backstories of Uber for the last few years has been, I remember reading several articles, is this company ever going to make money? They have long-term problems with the ability to just make money under their model. Uber Eats has been a smashing success from a profitability standpoint. CEO coming out today, raising guidance. These long-term sentiment shifts they're not small matters where you go from that unprofitable, big name company to profitability. I think it's massively huge. 2, the second reason I like it, I like stocks that have been beat up heading into this pullback a lot. And I particularly like them with bullish catalysts. Uber's already been beat up over the last couple months. You get a bullish catalyst, even if the market does nothing, I could see some swimming action. I really like that setup for beat up stocks. They get a bullish catalyst no matter what the market does. And number 3 reason I like Uber right now, you're going to have a lot of earnings problems, I think, this quarter with companies, especially that might cite inflation, pull guidance. We already know Uber's raising ahead of earnings. Take some of the sting out of the upcoming earnings if the company can deliver on these numbers. I think there is a lot going on for a lot of different reasons, like a long-term position stab here. I think this is a multi-bagger over time.
Can I add something? Do you want me to add something?
I do it, yeah.
IPO price was around 40. Support levels currently around 40. It's a reversal price point is 40. That's where the news came out, was at 40. That's where you saw the slowing momentum at 40. This could certainly be one of those technical scenarios where you look at this historically and say, yeah, that $40 was an obvious level to acquire Uber at.
And to add to that, I mean, this slowing momentum in that support level was forming before the positive news, right? So you already had a reasonable technical condition.
Well, Chucky, look at it. Decreasing volatility here. Obviously gets caught up in all of the market news, but not the same type of volatility. 40. It didn't want to blast that level. Got gobbled up, bought up the news. I like continuation here above 45. I mean, you look at the price movement here. Look at the consistency there. That's not a gap volatility craziness. That is a positive news gets gobbled up at support. Cash open happens, and let's ride the lightning. And you see the continuation above 45, very simple. You look at this, yeah, a lot of momentum. You're certainly chasing here, but you see that 45 handle, right? We're talking about the quality nature of support and resistance. 45, kind of zone of 45 over here. Look at this snapback following earnings over here, guys. Boom, boom, boom. Gap up on earnings. Snapback got gobbled up. Gap got filled. 45. Where's the hesitation on the intraday level today after such a positive news story? 45. So I like the continuation of 45, and I think you drive it from a short-term trading perspective. I think you can drive 45 into 50, but from a longer-term perspective, I do think historically this may be that opportunity.
Yeah, I mean, and that's why I brought it up. It just everything lined up as a potential. Like if you wanted to take a stab at Uber, you know, there's those price points, and you never know the future, right? You know, market could turn, everything can turn, but like, you know, those price points where when I look at a chart and I say, this might be as cheap relatively within $1 or $2 that I ever have a chance of getting Uber. That makes an attractive stab if you're interested in the company, in my opinion. So.
Okay.
All right. So what's the mood? I guess we can ask Apple. What's the mood when you don't feel like you want to chop people's heads 2 weeks in a row because they bought some good stuff?
It's mauve.
You don't, I want to remind Emily, when in doubt, chop somebody else's head off. The second thing, I kid. The second thing though is you don't have to kill somebody.
Okay, well, and
like we don't like, where's my sword? Somebody's taking my sword away from me. But we don't have to. If there's 3 quality picks that you see an opportunity in. Here's
why I love all 3 of them. Okay. Earlier in the show when I come on, I said, you know, hey, I was, you know, kind of like looking to reduce my delta and kind of, you know, start to look at things in a neutral area and cash flow. While all this mess that we're in is trying to figure out whether it's going to, you know, head bulls or bears to find those swing trading opportunities. So here you are, you bring DHI, which is obviously, you know, real estate stock, you know, real easy covered call, sitting at the 200. So, you know, it's already been beat up and everything else is trying to get down to the 200. If it holds the 200, great. If it doesn't, you've got a quick exit, right? So yeah. I love that about where DHI is, because I can still do cash flow, which is what I'm looking to do, while we kind of wait to, you know, to see what the market will do so we can start looking for those swing trading opportunities. So that's why I love DHI. And then Tim comes, you know, and brings Ant-Man. And I was sort of done swing trading the bulls. And I kind of feel like Al Pacino right now, because just when I thought I was out, they keep pulling me back in, type. So I was done with the bulls, kind of looking at some bearish opportunities. But here's a perfect setup, easy entry, easy target, you know, charts, you know, just, you can literally see those resistance levels and just kind of like where to take your target. So it looks pretty, it looks easy. I love that we have, you know, rising volatility towards earnings. I love everything about this one, because now I can still look for something in the bullish side of the market. So I like this one as well. And then Mark always, you know, just bringing me stuff that I don't look at, and then always remind me that I should look at them with Uber. You know, something that has been beaten up. I love the weekly chart because of how when everything else last week and this week got beat up and was breaking all types of, you know, supports, Uber's been holding it at 40. Like, it's like, what's going on with parking. Like, what's wrong with you guys? You know, I'm here. I am. I'm just, you know, I'm just here.
I'm ready to
And
party.
this-
That's what Uber is
right?
doing.
Yeah, exactly.
Mhm.
This week when everything else is breaking down, it's up. So I love this. I love Uber because it's something that I probably haven't traded in quite some time. But Mark always brings me stuff to add back to my watches that I've kind of forgotten and kind of, you know, threw in the basement. And
He
now
does
I'm
me
trying
too, Em. Like stocks, he'll bring him up, and I'm like, oh, I haven't thought about that stock for a while.
about
But
that
that,
forever.
that looks kind of good. Like I had this exact same thing on Uber that you did just Barry. Literally the exact same. Mark's talking. I'm like, oh, Uber's been out of sight, out of mind for me over the last
Wow.
6-7 months, like literally. And then all of a sudden I'm looking at that 40 handle and I'm like, oh, okay, let's go. Right. So yeah, absolutely.
Yeah, that is why I'm not feeling choppyish today. If anything, I would chop Tim because he did refer to me as Emily 6 times and not the Queen.
You counted.
I'll get, hold on, Em. I'll get the sword. We're good.
But I'm not gonna chop your head off of that. I mean, that you brought Ant-Man. It's, you know, yeah, I'm not chopping.
All right, no chop today.
No
We-
chop.